Hello everyone, myself Vaibhav. I welcome all of you to today's session of Market Movers, in which we will talk about the dollar index, which is increasingly looking oversold. It is trading close to the 92 zone, and after finding support closer to 92.5, it is indeed making double bottom kind of formation, and we might see some sort of reversal. The possibility is there after being in this oversold territory for quite long. We can expect sideways consolidation in the dollar index moving forward. So we will see if we can go forward for any opportunity for a long side trade, if any. So we will take a look on that from the technical perspective as well as the fundamental perspective. If we see the trading context for the day, earlier in the day we got the Reserve Bank of Australia's monetary policy announcement, and here, as expected, the RBA decided to leave the interest rates unchanged at 0.25%, but it has also announced that it will be doing the targeted bond buying to maintain the cash rates at 25%, 0.25%, as in recent past the cash rate was actually in the money markets, the rate was on the higher side. So to keep that closer to 0.25%, it will do the bond buying as and when necessary. Later on, we got the China's trade balance data, and here the Chinese figures have surprised, and the main driving factor has been the rising export. That, in a way, also kind of indicates that the China's trading partners, the other major economies of the world, are doing better, and they are importing more stuff from the China compared to the prior expectations. So that way, it can be interpreted that the economy is doing better than expected, and China is also one of the beneficiary of that, as we saw the Chinese trade surplus coming in above $62 billion compared to the expectation of $42 billion. Just in a while, we will also be getting the United States payroll data, the non-farm payroll data, and here we are looking at the job additions of around 1.6 million after last month's job addition of 4.6 million. This will be a big figure, but compared to the job losses which we saw in the lockdown period, this is of course still comparatively on the lower side. So let's see how the non-farm payroll data comes, and the market expectations to that. If we see the figures better than the expectations, I think the possibility of USD appreciating to at least some extent against major currencies can't be ruled out, and given its oversold situation, that increasingly looks probable. At the same time, the Canadian employment numbers are also going to be released, so we will be waiting for the Canadian unemployment rate as well as the employment change there. For the US as well, we will be getting the unemployment rate, and for the month of July, a reading close to 10% is being expected. Now, let's move on to the technical aspects of today's these two instruments. One is the dollar index, and then we will also take a look on the USDJPY, which is hovering close to 105.5 levels. Let's start with the dollar index technical outlook first. This is the daily time frame chart, and after continuing to fall towards this 161.8% Fibonacci expansion of its prior fall, the dollar index is entering into a consolidation phase, as you can see from this price action on the levels close to this 161.8% Fibonacci expansion of its prior fall. Here, in the month of June, we saw some reversal happening close to the 100% zone, and then it went back toward the 61.8% Fibonacci expansion. And after due consolidation, again it reversed the momentum and continued to fall for almost a month. And now, on the lower side, I think it is pretty much overstretched here. As you can see that this fall in the dollar index has been relentless, and from top of almost close to 104. We are more than 10% lower. But even if we consider the immediate trigger, the levels close to 97.6, we are of course substantially lower, almost 5 percentage point. So from that perspective as well, pullback can't be ruled out, and here the things are looking pretty much favorable. So we have to watch out for this double bottom kind of formation, and on the lower side, the immediate swing low around 92.5 can be considered as a crucial marker. So unless and until there is a fresh break below this level, I think we can try to exploit this situation to our advantage, as more and more the possibility is emerging that we will see sideways price action in the dollar index. Of course, the trend is still bearish, so we have to be careful, and we have to keep our positioning while keeping in mind that we are doing the contra trend trade. So accordingly, we have to manage the position sizing. And now here, if we consider the hourly chart, we are seeing this double bottom formation pretty clearly, and as I said, we have this reversal happening exactly closer to the identical level of 92.5, and now the dollar index is trying to approach toward this 200 SMA zone, which is there around 93.3. And if we indeed see the dollar index crossing above that, then that will give us additional confirmation. At the moment, we have to be a bit cautious, and I think if we allow it, the price action to unfold in maybe today's session of US trading session, then we will have more clarity. And once we come back after the weekend on Monday, during the early hours after the Japanese trading session start, we will have pretty much a clear idea of how the things are likely to play out in next few trading session. So here, focus on this lower side, and I think unless and until there is a fresh break, as I said, below this crucial level, we can indeed try to look for buying opportunities, and anything closer to this 50 SMA can be lapped up. The 50 SMA is passing close to 92.9, so that's not really far away from the current level. We are now seeing dollar index inching closer to 100 SMA, and 200 SMA is also not far away. So watch out for the price action, and then on the high side we can expect a fresh move toward these 94 levels in coming sessions if the price action continues to hold on to the support zone, and if we don't really get a fresh break on the downside, then anything closer to these 100 SMA can be looked into for fresh buying opportunities. Now let's move on to the USDJPY technical outlook. Here this is the daily time frame chart, and as you can see from the chart, we saw sharp reversal happening closer to 100% Fibonacci expansion of its prior fall, and now for last 3 to 4 trading session, for most part of this week, we have seen the USDJPY holding above 105 level, and last couple of session it has consolidated in a very range bound manner, and now it is trying to pick up momentum in today's session. Of course, there has been no break on the either side, so it is pretty much range bound even now, and we will see what are the emerging opportunities, possibilities for our trading setup. On the high side, we saw it finding resistance close to this first resistance zone, the central pivot point of the Ismail's pivot point series, and from there it reversed and went lower closer to 105. And now on the lower side, we are not really seeing fresh selling momentum, and rather it has consolidated above this 105 level. And even from the pivot point series perspective, we have this immediate resistance, but if the USD is able to break above that, then pretty much the upside opens up for the USD closer to 108. Otherwise, we have to be cautious, and as I said while discussing the dollar index outlook, we are not really expecting the USD to weaken, continue to weaken after this continuous slide, and because of that, I am more of a view of the possibility of USDJPY also staying in a range bound manner and consolidate with a sideways bias. So in such scenarios, the most we can do is to rely on the lower time frame chart to see if there are any scalping opportunities which are coming our way. And if we consider this crucial zone of around 105.25, here we had this prior swing high, then we had this break above that, and now we have almost 3 days of consolidation with the buying momentum coming in USDJPY as and when it is approaching this support area. So on the lower side, we have these prior swing low levels as well as this 100 SMA, sorry, 200 SMA is also fairly close. We have these couple of factors which are pointing to the possibility of the USDJPY finding good support above these important swing lows, and as you can see from the price action as well, it is indeed looking promising, and now the USDJPY is also trying to move on the higher side. So unless and until there is a break below 105.20, I think we can continue to trade with a possibility of USDJPY breaking on the upside. But as we are all aware, we have the non-farm payroll data coming up, so after that more clarity will be there. Even after non-farm payroll data is released, if we don't really see a fresh break on the lower side, then pretty much we can expect the USDJPY to climb and try to climb back to this 106.4 level, 106.5, which is also its prior swing high. So watch out for the non-farm payroll data, which is going to be released shortly, and I think by the time the video is uploaded on the channel, it might have already been released, so you will have that perspective. The data will also provide you the additional reason to go for a long trade or not. And I would say that if there is a no break after the release of non-farm payroll report, you can indeed continue to watch out for the price action and fresh opportunities to go long, with stop loss coming in around 105 and target, as I said, closer to these prior swing high. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you on Monday. Goodbye.